Sarat, you heard the report there. Is there any optimism among money managers such as yourself that this deal will actually propel the next leg higher, possibly, hypothetically, in the markets?
I think the part that was proposed today doesn't have any direct effect on the equity markets because the clean energy is going to go into very different buckets. That's not going to, it's not going to help any specific, I think, sector. The infrastructure play is going to be interesting because that is going to help the cyclicals. It's going to help the materials, and you've seen a little bit of a bounce today in those. But a lot of those have already been discounted, and the question is how fast that money gets allocated, and then specifically what sectors really do get the cash.
So Sarat, I'm curious, when we talk about the types of picks you're making in this environment, oftentimes in the past we've talked about things like construction aggregate, gravel and concrete companies, metals companies. What's on your list then, given the deal?
So, I mean, separate from there, I think one of the things that we like today, and we just had the CEO Wyndham on, is American Express. I mean, if you look at American Express and you look at the future of this company in terms of spending, today we're still at 50% of corporate expenditures, global expenditures. That is going to increase rapidly in the next couple of quarters. If you also look at B2B spend of American Express, it's only 5% of a huge market. Here's a stock that's trading at below 18 times earnings, that's growing double digits. And I think all this spending that's coming, that we've already had, is really going to help a stock like American Express.
All right, so it's about the consumer there. Is there anywhere else with regard to the infrastructure plan that we're talking about that could be good for, say, technology, broadband access, that sort of thing? We've talked a lot about this notion that infrastructure doesn't necessarily mean roads, bridges, and tunnels.
Yeah, I mean, there's a stock that directly correlates to that. It's Qualcomm. Qualcomm is the platform, the IP for 5G. This is a stock that in the past had a lot of issues with royalty. That's all been taken care of with China. The stock today trades at 14 times earnings. Again, double digits growth, 2% dividend yield, a very solid balance sheet. But Dom, to your point, why is this company going to be really interesting for infrastructure? Because when you start building out, it's just not your phone. It's going to be other areas that want to be connected to 5G. It could be your car. It could be your laptop. It could be your TV. It could be almost any device in the home that I think is going to start talking to each other at a much faster pace. And a company like Qualcomm that owns the IP, has the platform, and what you're seeing in a company like Qualcomm, they can't keep up with demand. And the chip sector has high margins, north of 60%. So if you want to play the infrastructure, you want to play more spending coming down to make our country stronger, faster, here's a company that I think has been left back. It's down 12% for the year.
Speaking of that kind of world of the future, Sarat, that Facebook event is going on right now. The company obviously dealing with a ton of challenges, seeing the shares down over the past couple of months. You pay attention to that? Would you be a buyer of Facebook here? Where do you think they sort of stand as we stack up a lot of the big tech companies, including the other two we're going to hear from after the bell?
So I'm a buyer of Facebook, and I was a buyer before the earnings. And I think from what I heard, my view on Facebook is keep aside kind of people's personal views on what's going on. The sum of the parts of Facebook, when you break them up and you look at WhatsApp and you look at Instagram and you look at Instagram as a potential huge source of commerce, it's worth a lot more than the company. And what they've also said is we're going to spend these billions of dollars on the metaverse. That is kind of their play for the next leg of growth. He's a company with a ton of cash. I think it's got an overhang on it. It trades at a market multiple. That's what the S&P trades at more than double the growth rate. So if you're a patient investor and you're going to have some rocky issues coming ahead, whether it's from Congress, whether it's for some of the things that are coming out in the press, I think on a pure DCF cash flow business in the next 3 to 5 years, you'll be well rewarded with a company like Facebook. But it's going to be noisy and rocky in the next few months.
There's its forward PE around 22.
Session highs for Facebook right now.
Yeah, exactly. Moving higher. There, you pushed the session highs, Sarat, so there you go. It's great to have you on today. Thank you, sir. We'll check back in soon.
Thank you.
Sarat Sethi.